11th of April, starting off with what looks like could still be a binary bet, Amigo. On the charting front, we can see that things are looking actually quite positive with the crawl around or above the 50-day moving average. And then the way that the 50-day line is now starting to rise, has been rising since the beginning of the month. And a rising 50-day line near the lows tends to be a positive signal. Got a rising trend channel there from January, and the upside here, while we hold above 4.25 pence, could be as high as 8 pence. So maybe just repeating what we saw in March with that rally towards the 200-day moving average. Obviously, anything could happen here, hence the term binary bet. Moving along to Angle, which has been perhaps rather more steady compared to Amigo. I suppose anything would be really. Here we've got a situation where it looks as though we've got a mid-move consolidation. Triple tested support there around the 97 pence level since the end of last month, which is nice, and that does suggest that above 97 we could at least hit 116, which was the late March peak, and then on to the top of that broadening triangle from back in December as high as £1.38, maybe by the end of next month, something like that. This stage already back below the 50-day line, 93 pence, really delaying the recovery scenario for that stock. One of the best calls of late, and maybe one that actually even surprised me, has been Avacta. It was looking quite groovy around the sort of 80, well, actually the 60 to 70 pence area. We had a key reversal to the upside back on the early part of this month, last week. In fact, it was around the 60, well, it's around the 70 pence area on the close, and we've pushed much higher since. We were initially going for £1, which was achieved on Friday, and then the best case scenario target as high as £1.50, which is the top of that broadening triangle from back in September. Maybe that could be hit by the end of next month. If you're looking for a stop loss there, or a trading stop loss, it'd be around 105, which is the current level of the 50-day moving average. You can also see that the 50-day moving average is starting to rise now, which actually means that we could just be at the beginning of the move higher rather than towards the end, but that's just a technical speculation. On to Audioboom, where I suppose the big news here is that there was no takeover announcement, which is probably what everyone was looking for, but we're still within that rising trend channel from back in October. Tested that as support today around the £19.10 level, and above that and the 50-day moving average at the same level. We're still looking for £26, £27 at the top of the October channel, maybe as soon as the end of next month. If you're cautious, wait for that pesky resistance there around £20.70 to be cleared on an end-of-day close basis before targeting the upper £20 area. On to Cadogan Petroleum, which looks as though it's starting to catch up with its fellow oilers now. We've got a classic bear trap gap reversal, so we gap down, exhaustion gap, and then bounce from there. Natural support here has been established, re-established, 2.75 pence, and above 2.75 we're looking for a reasonable upside here. Perhaps the initial upside would be the line of resistance I'm just drawing here, up towards 4.3 pence. That would complete the top of a triangle in place since the end of November. And at the moment, while we're above the 50-day moving average around 2.8 pence, 4.3 or so could be the target by the end of this month. Good bullish divergence as well. So we had that lower low for March, but the RSI actually tracked a bit higher, and that could, and already is, providing decent momentum for the shares. Deltic is next, and here we can see that we've had another bounce on the 50-day moving average, says the sort of multi-tested support around 2.95 pence. Got the top of a rising trend channel, which has been in place since this time last year. That's heading towards, I suppose, 3.5 pence, but the big picture target here, probably now up to as high as the line of resistance from June last year at 6 pence, maybe over the next 1 to 2 months, something like that. And that would be obviously a decent result in terms of risk reward if we can hold the 2.9 pence area. So looking quite chirpy as far as Deltic is concerned at the moment. Next contender is ECR Minerals, which has really perked up in the last couple of sessions. What's good here is that we had a gap, unfilled gap to the upside in the middle of last month, and we've held the top of that gap area at 1.3 pence, above 1.3, looking for that November resistance line projection as high as 2.1 pence by the end of next month. 50-day moving average already rising, has been rising for quite some time, and the fact that we had support above the 50-day line on the latest dip shows that this is a strong situation and could have decent momentum. Empyrean is on its way now, and here we've just broken to new highs with that V-shaped bull flag, breaking 12 pence, above 12 pence, looking for new leg to the upside as high as 18 pence, hopefully by the end of next month. Only back below 10.5, which is multi-tested support, really delaying the upside scenario on Empyrean. Another situation which is building up quite nicely is Europa oil and gas. Here we have this bull flag above old resistance at 2.5 pence and above 2.5. We're looking for the top of that rising trend channel from this time last year as high as 4 pence by the end of next month. 50-day line rising quite nicely now as well. On to Caracal, which delivered a decent announcement today. Still got that line of resistance in the 50-day moving average around a penny. So want to see an end of day or an end of week close above that. And also we'd like to see no price action back below 0.88, which has been recent mid-price support for the shares. So that might be another opportunity to assume a fourth test or a fifth test of support just below 0.9 pence, which is basically the original price that the shares came in at the end of August. Moving on to a stock which is maybe not so highly followed as GCAT, we've got Induction Health, and as you can probably guess what I'm going to say here, we've had a bear trap below the old December support at 45 pence. We've emerged from that with a gap, so it's a bear trap gap reversal, which is always nice, or usually nice, and that does suggest that we're looking for a top of September triangle target as high as 75 pence, maybe by the end of next month. And you can see how everything fits together there as well quite nicely with that broadening triangle. Early back below the floor of the gap, 43 pence at the moment, really delaying the upside scenario, but ideally we hold above 45, which was the old support. On to Kodal, which I know has its myriad of fans, and here gingerly trying to break out after the resistance line break from February and the break of the 50-day moving average at 0.28. All of that suggests that we could head towards this resistance line that I'm just drawing at the moment, which is around 0.39 by the end of the month, and that would be a decent outcome given the extended support we've had for the shares in the mid 0.2s over the recent past. Moving along to just a couple of final stocks now. First is Quadrise, back in fashion, I suppose. Here we broke that line of resistance from August, which I think I highlighted last week or the week before. We've gapped up today as well. The initial target was always going to be the 200-day moving average and post-December resistance at 2.8, which we've nearly done. And all that's left to do now is try and work out where the next destination for the shares could be. Looking probably for the 3.2, 3.3 pence zone by the end of next month, while we hold above the gap at just under 2 pence. Big or extended line of bullish divergence there, so that should mean that we'll have more of the kind of spikes higher that we've seen today. Finishing off with Scancell, which has not been the best performing stock of the last, so far this year, but maybe trying to change its style now. We've broken that neckline resistance there in mid-March around 12.6 pence, and above that we could see further pushes towards support on the way down. With last major one was around 16.75 pence, and maybe we'll see that over the next couple of weeks, but we need to hold that 12.5 pence area, and that's a pretty good stop loss area given that it was the old neckline resistance. Final piece of the jigsaw is the uptrend line in the RSI window, so that bullish divergence forecasting the quite aggressive spike that we have seen today. That's it from me today. More updates tomorrow.